All right, guys, in this video, we are going to look at the learning approaches in reinforcement learning. And generally, they can be classified into two categories, right? We have policy based methods, like we already saw, like the brain of the agent is called a policy. So we have policy based methods, and we have what we call value-based methods, right? So these are the two ways that um, the two learning approaches that we can generalize in reinforcement learning. Although sometimes some methodologies that produce very good results are a hybrid of those two methods, like they use both of the methods. And so, what is a policy-based method, right? So, remember we mentioned the policy is much like a decision-making system, right? So, the policy-based method is a way in which an agent learns to take action. So, it learns directly. So, it's a direct learning method, right? And why do we say it's a direct learning method? So it's a direct learning method because the agent learns to take actions whenever at a certain state, right? Take, for example, we have an agent that sees the price of an asset at 20K. It's going to learn what can I do whenever I see the asset at 20K, right? So there's an action that is going to take. So that's what policy-based methods does. So it learns what action to take at a certain state. And then it says we can say that since we've already explained that we are learning a function that maps states to actions, right? So we are learning a policy function. So in a policy-based method, we are learning a policy function. And then in value-based methods, so we can see that policy-based methods we learn directly. In value-based methods, we learn indirectly. So what do we mean by that? So it's much like we learn the value of a future state, and then we choose to go to that state. So let's say, for example, we are trading and we see that the price of an asset is 20K, right? And then we can predict, like, okay, is it going to the next price, is it going to be 21K or 19K? So maybe the price will be 19K, but what is the value of buying the asset and it's going to 19K, right? Or what is the value of buying the asset and it going to 21K? So we learn a function that tries to move the agent to a valuable state. So we learn a value function, right? So we learn the value of being at a certain state. So let me put it in a much simpler way. Let's say you live in a country, right? And there are different cities in the country, and you really want to make a lot of money, right? So when people want to do this, you want to earn a higher income. When people want to do this, what do? They will move to the big cities. Why? Because because their value in that city is higher, right? Not really like their value in that city is higher, but because they will have the opportunity to earn a higher income, which is what they are trying to do, right? So the value that they want to have is to earn a higher income. And so the big cities offer that higher value, right? So they are going to learn to go to the big city. So we can put it in that way. And so we learn a value function, right? What is the value? So for instance, some people, the value, maybe you value being in a quiet environment, and you choose to go to the countryside, right? So different people value different things. And so you learn this value function and you move to the state that gives you the highest value. So this is what value-based methods try to do. They learn a value function. So they learn the value of being at a certain state. And then policy-based methods, they learn how to make actions when they learn how to make the best action when they are at a certain state, right? So if we want to expand on this, we can say, okay, when you move to a bigger city, there are certain actions that you still need to take, right? But then you know the value of being at that city. So we can combine these two methods to form a hybrid method. So let's go ahead and see, so we have the formulation of a value function, which we're going to look in as we move into further details. So let's look at policy-based methods. In policy-based methods, we have two different types of policy-based methods. We have a deterministic policy. So a deterministic policy states that when at a given state, the agent will always return the same action, right? So let's say that in our trading state, so let's say we have the price of an asset at 20K and we decide to buy. So in policy-based methods, whenever it sees 20K, it's going to buy that asset. Whenever it sees 20K, it's going to buy that asset. So this is a very naive example. Just take it as it is like that. It's not something that you should practice in real life. This is just a way of explaining what a policy-based method. It's more complex than I'm trying to explain. We'll go into the details in a future video. And then let's take a look at this chart. Let me try to explain the chart, because we're going to use this chart to explain a lot of other things. So just say that we have a price, right? So this is the price of an asset on the y-axis, and on the x-axis we have time, right? So the green boxes are the prices. So we say at this time, this is the price. At this time, this is the price of the asset. At this time, this is the price of the asset, and so on and so forth, right? So we've broken this down into like boxes so that we're going to use it to explain what a policy-based method is. And so we have states. So these are different states, right? This box, this box, this box, these are different states. So this is not the state. This is the state in which the agent sees, and for example, the price of an asset at each time, right? So it's a state. So at time t equals to 1, this is the state that we have, right? Yeah. So we have actions. So whenever at a certain state you take an action. So when you are in the state before this one, what action are you going to take? And when you get to this state, when they show you this price, what action are you going to take? When I see this price, the best action for me to take is to buy, because the price is going to go up. When I buy, the price goes up, my value increases, I make profit, right? When I'm here, I buy. So you can see the actions here. So remember the actions we made. Green is for buy, white is for hold, and red is for sell. So when we are at this state, we buy. When we buy, the price goes up, we make profit. When we are at this state, we buy. When we buy, the price goes up, we make profit. When we are at this state, what is the best action to do at this state? To sell, right? You sell, the price goes down, you make profit. When you're at this state, what do? You hold, because the price doesn't change, right? So we are taking these decisions here because we already can see the future here. But usually the agent doesn't, in trading, the agent doesn't see the future. It has to guess what the future looks like. So if the agent is at this state, it's going to guess, is the price going to go up or down, or it's going to stay the same, or it's going to go down, right? So if he guesses the price is going to go down, so he's going to take this action, sell. So in policy-based method, deterministic policy means that whenever we see the price here, whenever we are in a state here at this price, we are going to buy. So for example, when we are here, we haven't seen the future state, but we will buy. So this is just an illustrative example of what deterministic policy is, right? So we are going to take this action, this action, this action, this action, and this action. And so whenever we see a state, so you can see now we have a state, we are here. What is our agent going to do? What do you think he's going to do? Looking at this is the incoming state. Now he can see this state here. So you're here. What are you going to do? Maybe he buys, right? So here he can choose to buy. If he buys, it means that he's guessing that from here the policy is going to go here, and maybe he will lose money, right? So this is just for illustration's sake. Don't take it as any trading advice, please. And then so we have a state, right? So we are at a state. So given a state, right, we are at this state. We have a policy, right? So a policy, which is that like a policy function, right? The function of that state, right? The function of that state is equal to an action, which is this action. So this policy function is the brain of the agent, which produces an action. So we can map this. We have a state, so we have a policy which maps that state to an action. And then let's look at the stochastic policy, right? What is a stochastic policy? So instead of outputting like a state, we are going to output the probability over actions, right? So instead of taking an action directly, we're going to output the probability of taking an action. So we've already seen this, our state, and then actions. So what are our actions going to look like? So for instance, you're here, and we know that for deterministic policy, we are going to directly take an action to go here or here or here. But for stochastic policy, what we are going to do is we are going to look at what is the probability of making profit if we go here. What is the probability of making profit if we go here? And what is the probability of making profit if we go here? And then we are going to assign probabilities to this when we see this state, when we are at this state, right? So exactly what we do, like for example, if you are at this state, if you're, so this one stands for this state, right? The probability of taking of buying is 0.6. The probability of holding 0.3. So probability of selling is 0.1. So here we have mapped these three probabilities to here, here, and here. And then you see that the highest probability is 0.6, and we're going to take that action. So actually, instead of giving us an action directly, it gives a probability. So this is a stochastic policy, right? So at certain places, you can see the probabilities, they are very close. Like here, we don't know what the future is. What are you going to do? Maybe you take a random decision here, right? So this is what a stochastic policy is. And so explaining it in this form again, we'll say that we have a state, we have a policy, which outputs an action. Here it outputs the probability of a certain action based on the state that it's in, right? So we can state this as we have a state, and then our policy is the probability distribution of the action given the state, right? What's the probability of an action given a state? So the probability distribution is the probability of this, this, and this given this state. So we have the probability of buy 0.8, hold 0.5, sell 0.05. So here we're probably going to buy, right? Because it has a higher probability, but it's going to show you the probability. And so you can still decide to flip a coin and see a range, and if the determine how you can pick your action. And then we have this just says the probability distribution, right? So the the policy, the action that we are going to take given the stochastic policy is the action, the policy of the action given the state, right? So it's equal to the probability of the probability distribution of the action given the state, right? So this is what deterministic and a deterministic policy and a stochastic policy is, right? So we have policy-based methods, and these are the two different types of policy-based methods. Like we already mentioned, this one directly takes an action, and this one produces the probability of all the different actions. All right, let's move forward. Let's look at another learning approach that we mentioned, are value-based methods that learns the value of moving to a certain state, like we already explained. So in value-based methods, we learn a value function. This value function maps a state, right? You map the state to the expected value of being at that state, right? So we want to see if we're at this state, what is the value of being at this state, right? So it gives me more value. I can make more profit in terms of trading. So the value of a state is the expected discounted return. So for example, the value of a state is you can calculate, like if you have a policy. So if you have let's say you're trading for a month, and you're at a certain state, the value of that state is equal to the profit you will make from being at that state and following that policy to the last state, right? So the policy that you're trying to learn. And so that sounds a little complicated. We'll break that down in a second, right? So act according to our policy. This means that our policy is going to the state with the highest value. So of course, when you have states which have values, you're going to choose the state with the highest value, right? So let's illustrate this using our previous price chart, right? So we know that this is the true price movement. And let's say we've already learned a policy, a value function. And this value function has learned that this is how the price moves, right? So for you to make the highest profit, you need to choose this to be in these states. So you need to choose to be in this state. So these states have higher values than their neighboring states, right? So if I'm here, what state should I choose? I should choose this state because it has the highest value, right? And the reason why it starts from -6 to -1 is because we use discounted rewards, right? Discounted rewards. Yeah, we'll explain that detailedly in the future, but we're not going deeper into that right now. And so when you see that when you are at this state, you want to take an action with the highest value, right? So which action has the highest value? This one. And when you are here, which action has the highest value? This. When you are here, state. Which state has the highest value? This one. So you want to move to this state because you want to move to the state that has the highest value. So that's what a value function does. So we have learned a policy that gives values to states. And so whenever you are at a certain state, you can see the value of future states, right? So, and you want to move to a future state that has a higher value. So that's what we are trying to do here. So these are the actions that you're going to take based on the value function, right? So what is a value function? So we can define a value function as the expected discounted return, right? So this is the expected discounted return following the given policy, right? Starting at a given state. So we can see the value of a state starting at state S. So you see that this is the reward of future state. So if we start at a state here, we are going to look at the expected returns, expected discounted returns in these future states in order to calculate the value of this state. So whenever we are here, we are taking S equals to, so we are taking the rewards at state here, the rewards at these states discounted to calculate the value. But when we are here, we will take the discounted rewards at this state to calculate the value of this state, right? So this is how we calculate. Why do we do that? Because we want to make a decision that gives us the best end result. So that's why we do that. So we haven't gone into the details, but I'll make a video to clarify on all this. Or if you have a question, please just leave a comment. And so value-based methods, we've tried to explain this. We haven't really explained, but if you have a question, please just leave a comment in the description and I'll try to make it more clearer. Or I can make a special video just to describe the function, how the value function is calculated. And so we can see how the values of any states is given, right? All right. And so these are the two different methods of learning, value-based and policy-based methods, right? Yeah, we can stop here.